Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is February 22nd, Thursday here. Hope you guys are having a wonderful day. We do got a couple economic news to go over today. Tomorrow there will be no economic news scheduled for today, but we'll have a few Fed members giving scheduled appointments or scheduled speeches tomorrow, and that could be what could move the markets potentially tomorrow. So let's jump right into it. For the economic news, we got the weekly jobless claims. So last week we had 230,000 people applying for unemployment. Forecast for this week is supposed to be in the same range at 229, and it came in at 222. So that basically 222,000 people applying for unemployment. So this is a good number here. We're still at really low levels here. Not since 1973 have we had these type of levels for people applying for unemployment. But the reason why this is also important is this is a sample week. This is the numbers that are going to be used towards the BLS's, the Bureau of Labor Statistics, uh, calculations for new jobs created for the month of February. And with such a low number here, this could potentially create a nice high jobs number for the month of February when they release that here coming March. I think it's March 9th is the date there. So good numbers overall there. We also got leading indicators. This kind of gives us a gauge as to where the economy is moving, like 6 months down the road there. And back in December, it went up 6.6%, which is a great number there. So from November to December, it went up 0.6%. And from December to January, it went up 1%. So it heated up in January here, which is obviously very good news. But also part of the issues we've been kind of seeing here, or concerns here, that, yesterday we had the FOMC released their minutes yesterday, and again, they're basically saying the economy is growing more rapidly than growing faster than what they forecasted. They do feel that they kind of mentioned that wage inflation is really not an issue, but everybody else is kind of shrugging that off because they really do see wage inflation growing. I mean, the number that came in January was the highest number we've seen in quite some time. And everybody knows with the job market growing at such a low level right now, that people are paying more to keep their employees because there simply is not, there's not simply not enough people to maintain those jobs that are being created. So we have so many jobs being created, just not enough people there, and so that they don't lose good employees, they're paying them more wages. So as a result, wages are going up as a result of it. So again, people are kind of disregarding what the Fed said in that regards. They don't necessarily agree with what the Fed is stating, but the Fed is saying it's appropriate that with the adjustment, they think the target rate could be reached sooner than expectations, and so therefore they could potentially raise rates a little bit more at a faster pace. So again, there's a lot of debate on that. We've had a few Fed members speak out and simply say that it's appropriate, but it doesn't mean they're going to do, like, say, 1% rate hike this year in 2018. So there's a few Fed members out there trying to quash those concerns. Already on slate is, at least projections, that they believe that there'll be a three-quarter rate hike. So coming in March, and then we'll probably have one sometime in the summer or maybe September seems to be a popular time, and then probably towards the end of the year, like around December. But maybe there might be another one snuck in there, depending on where inflation if it is rapidly increasing or if it's at a modest pace. Let's kind of move on here to the headline news. The stock market is up today. The Dow is actually was up over 200, and I think right now it's been kind of knocking at about the 300 mark right now. Kind of making up for yesterday. It was up quite a bit yesterday, and then when the FOMC minutes came out, it kind of tanked, as well as the bond market, which we'll see here in a minute. And now it's kind of coming back here. So all three indexes are up in the stock market. Sorry about that. Bond market, here we are. So as you can see, we tanked quite a bit here in the mortgage-backed securities. We are up currently about 19 basis points. We are up a little bit further from where we left off yesterday, which is hopefully making up. As you can see, we're still in that trend line. If we drew a line here, we have a little trend line here going over here. And we still got room both ways to grow. We can go a little bit higher, we can go a little bit lower, but we're still within the trend line if we want to move up or down. But hopefully, obviously, we want to move up because we want to get better rates. over here. So let's take a look here at the yields. Now, this morning, yields broke above this important ceiling. As we saw, we've been testing it, but as we indicated yesterday, this trend line that's moving up here is going to push it to make a decision, either go up or go down. And so if it went down, it would break the trend, and it could potentially, we could see better rates. But it could continue going up, which the trend is pushing that way, and it did break above that and continued that trend. So we started the day off about where we left off yesterday, but since we've come down, we're kind of touching on that. What used to be a thing is now going to be a floor of support for it, and the next resistance level is going to be about 3.04. So we got some room in the yields, assuming that it's going to continue this trend to keep growing, which will push rates up even further. All right, so but rates are a little bit better than where we left off yesterday, because there was repriced for the worst yesterday after the Fed minutes came out and bond market started tanking. Bond market was way down, actually, even as low as 52 basis points, and I think it closed in around minus 37 at the start of it. So anyways, I hope that helps you guys out. Hope you guys enjoy the rest of your day. If you guys want to get more data, just come over to Twitter. We do have a 7-year Treasury auction going on later today, and that could also move the mortgage-backed security markets as well. So again, I hope you guys have a wonderful day. Stop by Twitter if you guys want to get more updates. Otherwise, I'll look forward to see you guys tomorrow. Thanks again. Take care. Bye-bye.